Your biggest concern at the moment seems to be the appreciation of the euro against the dollar. We were in Sintra earlier this week where the Vice President, Mr. De Guindos, was talking about 120 as the limit. What is your take on this?
So I won't comment on my colleague's comment. It's a general rule. But we look closely at the volatility of the exchange rate. It has been significant since the start of the year, with a 13% appreciation of the euro against the dollar. By the way, it's not a specific appreciation of the euro, it's more a general decline of the dollar against major currencies. So let me be precise on that. We don't have any specific target for the exchange rate, clearly. But this does not mean it's a benign neglect for us, because an appreciation of the euro has a clear disinflationary effect, which we take into account in our monetary assessment. To give you a simple figure, according to our estimates, if we have a 10% appreciation of the euro, a lasting one, it means 0.2% inflation less yearly, year after year, in each of the 3 next years. So it's a significant effect. If lasting, it would increase, it could increase, as several of my colleagues said, and myself, it could increase the risk of undershooting our target. That I don't conclude from that any signal decision for our July or September meeting, but this is a risk we must take into account.
So do you reckon that the risks of undershooting the ECB inflation target are currently increasing?
Due to this factor of the exchange rate, yes, for the reason I gave of a significant disinflationary effect. Let me add that if we look at the other hot question, which is a question of tariffs and a possible trade deal, I wish we will have one, we already know that it won't have any significant inflationary effect in the euro area, differently from the US, probably. So we don't see risk coming from inflation risk coming from this front. But these are, if I may stress it, Caroline, these are all other factors being equal, which is a strong hypothesis, because we live in a world of huge uncertainty, even unpredictability. This is why we must remain completely optional, data-driven, meeting by meeting. We are not on a pre-committed path for interest rates.
You said last month that if the ECB were to act over the next 6 months, a rate cut would be the likely direction. At the moment, the markets are pricing a pause for the July meeting, and it's kind of 50-50 for September. Are you comfortable with that?
Again, I won't comment on July or September. We must take a somewhat longer-term view. This is, by the way, the purpose of our strategy review, which we adopted in Sintra and which is a very important step. We are at present in a good position. As Christine Lagarde stressed, we are 2% inflation and 2% interest rates. But a neutral rate, and 2% is probably about a neutral rate, a neutral rate and terminal rate can be different animals. We will see where we go, but this is not a question limited to July or September. Again, in this uncertain world, we must be rather clear about our reaction function and be ready to be pragmatic, according to data, and agile, move if necessary.
So are you comfortable with the way the rate cuts are transmitting to the real economy?
Yes.
And what, in your opinion, could derail this?
Sorry?
And what could derail this transmission?
No, you are right. This is a very... I spoke of our reaction function. This is one very important of it. The two other ones being obviously underlying inflation, which is diminishing, and inflation outlook, our forecast. And we spoke about the various risks. But about transmission, it went rather well. And if you compare this cycle with the previous tightening cycles, I would say the transmission lag was 12 to 18 months. If we look at the funding of real economy, as you said, be it corporate or household, this funding is going on. We looked whether it was different in countries with floating rate or in countries with fixed rates, like France. It works well.
You were talking about the tariffs not having a significant impact. We obviously have this July 9 deadline. We may have the...
On inflation.
On inflation. In that case, if you have enough space, do you think the ECB should use this space to support economic growth?
No, again, I won't say anything about July or September. I try to give the rationale of our reaction function. Our first compass is inflation. And again, we are 2%. This is a good position. And this will be the first determinant of our policy decisions. If we are on our target on inflation, obviously, we should look at the growth path, and we can support, which we did. If I may stress it, we are in the euro area 2% interest rates. This is much less than, say, the UK or the US, which are at more than 4%. So when people say that the ECB does not support growth, they should look at figures.
May I have one question? Because we're here in France, you can hear the music of the south of France right here in Aix-en-Provence. In France, the inflation is way below the 2% target. And in fact, economic growth is also well behind the rest of the Eurozone. Do you think France risks becoming the next sick man of Europe?
No, I don't think so. Inflation below target, this is rather good news for real income and for competitiveness in this country. You are right, growth is too slow. By the way, growth in France in 23 and 24 was above the euro average, so there is some catching up. But we must look at structural reforms. We must diminish the uncertainty, including the fiscal uncertainty, which is for real in this country. So this is up to other policies. And part of this problem, of growth problem, is not French specific. It's really a European problem. We have a unique opportunity with this unfortunate US shift to accelerate Europe's reform. This is about the Letta and Draghi report. This is about the competitiveness compass of the Commission. Let me give one figure, if I may. We are at present more or less at 1% potential growth in Europe. And in France, by the way, it's close. We should go to 1.5%. And we can do it. We have the means, integrate more the single market and savings and investment union.